And within 6 months, of course, we were number one in the country in terms of distribution. I set up the whole distribution system, the whole marketing system, marketing campaign, and financial controls. So we were leading in the country within 6 months because Casio was the brand. But we realized that we are fighting with Casio in the market because Casio was being smuggled unofficially into India, but it's unethical. So as it regulations provide practices, guidelines, ethics has to come from inside.
Today's episode on Success Documented is with Mr. Jay Toshniwal. With almost 2 decades of experience being the CEO of Toshniwal Equity Services, he has extensive experience in the field of finance, financial services, and the stock market. How are you today?
Oh, great!
Everything's
Been a
good?
great day, yeah.
So, starting from the beginning, how did you think your education at IIM Ahmedabad shaped your career in finance and equity services?
Actually, what I believe is that education is a way of formal training, a training which trains the mind. It gives imparts various skills to us, and that is what creates us, makes us capable to do things in life. So my education of CA prior to IIM Ahmedabad and subsequently management at IIM Ahmedabad helped me train my mind to understand the world of finance, understand the world of business, finance being a subset of the whole business. As a chartered accountant, I could view business from the financial perspective. But by doing the MBA at IIM Ahmedabad, we got a holistic view of the business, how different factors, different functions in the business result in a success. So some businesses could be more marketing oriented, where the key result area would be sales or marketing. In some businesses, finance could be a key performance area. In some businesses, production or technology could be the key area. Some businesses, human resource could be the key area of success. So through the training at IIM Ahmedabad, I found that different businesses have to be viewed from different lenses, and also there is a holistic view of the business. So in case we find that there is a business oriented towards a particular functional area, so which is the key result area for the business, then we have to understand the context of that in terms of global and the local context, and understand whether the company is able to monitor and manage the external factors to swim through the uh, difficulties and challenges, and which can lead to success. So that formal training at IIM Ahmedabad was excellent, and Ahmedabad, particularly amongst all the IIM institutes, focuses on general management. Though they offer various courses on all functional areas, we have a choice to choose courses across various functions, and a person can select courses from different functions. So that helped me a lot. So I could choose courses in each of the functional areas of business. So that training was excellent, and I find that compared to my peers who are other chartered accountants but who have not done management, I could find that my view of business, my understanding of business, my vision would be substantially wider and longer than many of such peers whom I interact with.
Mhm. That's an interesting point you brought up, and I think now more than ever, there's like a increasing trend on hating on college, and you know, uh, people don't value degrees as much as they used to, I believe. And people are like, I can learn this on my own. Why should I pay X amount to go to college? Well, what do you say about that?
No, I think even today, at least in the Indian context and probably also in the global context, a degree from a reputed college is necessary because people view education from the perspective of placements. So every student nowadays talks about ROI as to how much I'm investing, what I'm paying to the institute, and what sort of placement I'm going to get. So ROI has come into the picture, but I think that's not right. I feel that whether you get educated on your own or through a formal institute or college, uh, it is necessary to use education as a tool of learning. And I feel that a proper college, a formal college, provides you with the environment, with colleagues, with peers, and the learning environment, the experience of teachers who are experts in their fields. It gives a sort of a platform where you can inculcate knowledge, imbibe new ideas, and bounce off ideas with your peers, work in a team, and work the way you will actually work in business. So I feel a formal college degree is essential, and self-learning is definitely useful. It can supplement. I feel it cannot replace a formal college.
Hmm. Hmm. That's interesting. So going from IIM Ahmedabad to where you are today, I believe you had a different role in between switching from college to Toshniwal Equity Services. What was that?
Yeah, having qualified in 1986,
Hmm.
earlier I had a passion to be an entrepreneur since the beginning.
Hmm.
I have a passion to invest in various companies, stock markets, that I've been doing since I was in school and college also. When I was in Ahmedabad, I had opened an account with broker in Ahmedabad also to continue my investments. So I find that India has been a growing country offering a lot of opportunities, and many companies have captured the opportunity. So I could participate in that. So post completion of my management, since I was keen to start off something on my own, I was into consultancy as a chartered accountant, financial consultancy and project consultancy. Then I came across a group, Thakral Group of Singapore. They had set up a factory at Bangalore to assemble calculators with Casio. And Casio had lent the brand name. So we had a joint brand name called Thakral Casio. So we were importing components from Casio, Japan, assembling the calculators at Bangalore, and then marketing across India. So it was not a very large organization, and I joined when we just started the plant. So my role was primarily on the marketing and finance side. And within 6 months, of course, we were number one in the country in terms of distribution. I set up the whole distribution system, the whole marketing system, marketing campaign, and financial controls. So we were leading in the country within 6 months because Casio was the brand. But we realized that we are fighting with Casio in the market because Casio was being smuggled unofficially into India through unauthorized channels, which would not pay the duties, whereas we had to pay all the duties to government, the taxes. So we found that our ex-factory price was matching the unofficial market, smuggled market wholesale rates.
Oh.
But then we had to suffer taxes in terms of excise duty and sales tax and various other taxes octroi. So we were outpriced by about 40% due to the taxes. And as a result, we found that many shopkeepers used to keep our product on the shelf just to show to customers and actually sell the smuggled products.
Huh.
So the market, we could not really break largely into the market, though we were leading the market. But I would say that time market would have been, say, 10 to 20% official and 80% would be smuggled market. That
Oh,
was the
wow.
breakup that time. We wanted to indigenize production. So we contacted various vendors to develop parts for us. For example, plastic parts or LCDs or switches, PCBs. And we realized that the economic order quantity for indigenizing would run into million pieces or 2 million pieces. Whereas we were doing maybe 50,000 pieces or 2 lakh pieces, 100,000 pieces in a year. So indigenization at that time was a challenge. It was not possible, sort of, so to say, unless we had volumes. So we were talking to government as to how we can rationalize duties so that we can actually effectively compete in the marketplace. But it took time for the government to realize those things. So it couldn't happen while I was there. So I was there for about a year and a half or so. And it was a very satisfying journey, very learning journey for me. Interacted with Thakral Group also, who are the largest distributors for Casio in Southeast Asia.
Okay.
Then I was looking for an opportunity where I could join a large project of a large group and at a stage where it is being planned. So I wanted to go to the project implementation stage.
Mhm.
So I came across the opportunity with Grasim Industries. So Aditya Birla Group had a couple of opportunities. They had companies like Indian Rayon, Grasim, and Indogal Fertilizers, and Mangalore Refinery, MRPL. So they were in the process of working on the projects. So I was looking at these 3, 4 projects where I could join. And at that time, I came to understand that the sponge iron project of Grasim is moving ahead fast. It has been cleared for implementation. So I joined Grasim. I was among the first 5 members of the team, and we used to prepare our projected financials for the project, expected profitabilities, what capacity should we plan. Then we used a lot of knowledge which we gained at IIM. in terms of location of the factory, considering various factors which are inputs. For example, we had to get a power supply from almost 100 kilometers, 80 to 100 kilometers away. We had to get water from another direction from 35 kilometers distance. We had to get natural gas as a feedstock from about 35 kilometers from a third direction. And we had to import raw material. So we had to unload the material at our factory. So we had to be close to the sea. And market was in Western India. So all the various factors of which could influence the location of project, which we learned at IIM Ahmedabad, those theories could be actually applied in practice, and that was a super, very satisfying experience. Because typically students feel that what we learn in college is theory, which is not useful in practice. But I found that almost all theories what we learned could be used in practice. That was very good. So we set up the project. We acquired about 500 acres of land. We negotiated technologies, issued orders for equipments, and we also did appraisal with the IDBI and IFC Washington for the loans and raised finance through a follow-on offer. And then we recruited various staff. So effectively, it took us about almost 4 years to complete the project. So I was at Bombay for first 2 years, and last 2 years I went to the site. I lived at Alibag. So it was a very small, sleepy town. Did not have proper telecom infrastructure. We would not get a phone. So we had to talk to government and install a new exchange so we could get enough number of telephones.
Interesting.
We had to work with that. And of course, local land acquisition means a lot of opposition from the local farmers. And then there is politics involved, local politics. So we had to manage that.
What was dealing with the politics like? That must have been probably the hardest part of the whole thing.
Yes, it is hardest part. It is like a coconut. A politician is like a coconut. So when you look at a politician, it is very hard to break into. Looks very hard to work with. But once you able to convince them as to what you are doing, how it benefits the people, how it benefits the local economy. If you're able to win them over with your objectives, and of course you have to take care of them also, then you are into the coconut, and then you come to the softer part, and there is full cooperation from them.
Okay.
So it was a project coming up in a backward area. So it was going to develop the whole area economically, provide jobs, provide business. So that was a great positive for the local economy. And the politicians typically also try to raise objections because they want to get a higher value for the land for the local farmers. So they gain their votes also, sympathy also, and of course benefits them. And for I realized that time that for farmers, uh, land is like the mother. So disposition of land is a very emotional and a difficult thing for a farmer. And though we feel that that time the price was say about 30,000 rupees an acre or 40,000 rupees an acre, we paid 200,000 rupees an acre, almost 6, 7 times the market value. But then I realized that land cost in a whole project of a 500 crores of the project cost. So land cost was just about 10 crores at a higher price. At lower price, it was about 2, 3 crores.
Yeah.
So by paying 6, 7 extra crores, the whole project cost went up by about 2, 3%, 2%, less than 2%. But it got us the goodwill of the local people. So I always believe that whenever any industry wants to put up a project, the local population who are affected by the project should be taken care of in a reasonable manner. That so that you can ensure that the locals are happy and they support you. So that is a big lesson which I learned. When I was progressing in the company, I became general manager, got a car, got a bungalow. Things were becoming a little cozy, and we were just about to commission the project.
Yeah.
And but my passion was shares. I was interested in the stock markets, investments. So I felt that at that time the salaries had started rising, but nothing compared to what we see today. But I found that life was getting comfortable. So in case I did not leave the company at that stage, the opportunity cost of leaving would rise. So I would not be able to leave.
Okay.
So I left the company in 1992, and I came to Bombay, back to Bombay, into the markets.
And that must have been through
About 92.
Okay. Yeah.
So started working closely with a friend of mine, Mr. Ramesh M. Namani. Uh, we develop our clients. We develop institutional broking business under his name. And then I realized that I had to have a membership of the exchanges to grow. So we took a membership of NSE. and then subsequently BSE, then commodities and currencies. So 92 onwards, gradually we started growing the business, developing clients, and it has been almost like 25 years into the business, and we have seen a substantial transformation of business. The way business is done, the whole value proposition of business has changed. The way business is done is changed. Customers dealing with customers has changed. So we have witnessed various, I would say, earth-shattering changes, so to say, in terms of technology, in terms of customer services, in terms of uh, fluctuations in the market, in terms of participation by different players, manipulations, scams, everything we have gone through, and we have seen this big change.
Can you expand on that a bit? Because, Toshniwal Equities is over 2 decades old. It's gone through pretty much every phase you can think of in the past few decades. Like, can you tell us a bit about the early stages of the company and how it's evolved so far, how it's become what it is now?
We started, it is basically primarily a family concern. My brother was a chartered accountant and cost works accountant. He is with me, and we employed staff to work with us. So we had some clients. We developed clients through friends, relatives, references. We don't take in any walk-in clients. So any person who wants to work with us as a client, he has to be referred by someone. So we also seek references, meet people, and we discuss about business. And wherever a person is comfortable to do business with us, they can become our clients. And we are a full-service brokerage, not a discount brokerage. So we have been serving clients, looking after their finances, developing a long-term relationship with them. So today also, almost 60% of clients would be more than 10 to 20-year-old relationships. And there's a complete trust we have with the clients. Uh, what we also found was that as the company grew, initially exchange NSE was a new exchange, so they also were growing. So we grew with the exchange. It was a new exchange with new technology, new business practices, which were suitable to us, and we liked it. So we kept growing with them. In 1992, before I started, there was a Harshad Mehta scam, supposed to be so-called stock market scam. Actually, it was a really called a bank scam, because the banks lent money against fictitious securities or non-existent securities. So the scam was in the bank, but in the newspaper it came out as stock market scam. Then in 19
Sorry to interrupt you. I believe there was something on Netflix about that.
yes, there is a full series
Uh-huh.
on Harshad Mehta.
Yeah, yeah.
Yes,
That was fascinating to watch.
yes, it is worth watching.
Yeah.
And you will realize that the weak link in the whole system was the banks.
The banks, yeah, yeah.
The lending against the bank receipts,
And
which should have
how
been
did that
secured.
change perceptions about the stock market? Because that was everywhere in Mumbai, at least. Everyone knew about it. How did that change perceptions?
What happened was that stock markets prior to Harshad Mehta was a small profession, few people dealing with it, and volumes of business were not very large. But then, when Harshad Mehta came in, he came in with large vision. And he talked. He was a visionary, just like you can talk of Dhirubhai Ambani as a visionary. So he was a big visionary in the markets. He would think very of companies growing to very large corporates, and valuations also catching up on that. So he used that vision, and of course he used his money available to him to invest in stocks. And in the market, basically, its market is like a balloon. You push air into it and it expands. So in the markets also, you push in money and the prices inflate.
Yeah.
So with more money at his disposal, which he invested, the stock prices kept rising, and we had richer valuations. And of course, then when the money vanished, the markets crashed.
Yeah.
So that time, a lot of people who were sucked into the system and who invested in wrong stocks, they lost money. One interesting incident I can narrate is that in 1992, when I'd left Grasim, I had resigned but not left. I was just on the verge of leaving. Uh, I had come to my office at Sakar Bhavan. While I was entering the building, I saw Harshad Mehta coming out of the building, flanked by two city bankers on either side. They're in their black suits. And we, as Grasim, as a company, we have dealt with Citibank And we always found that Citibank would normally go to the customer. But here I found that Harshad Mehta had gone to Citibank, and he was coming out from Citibank flanked by two bankers. So this was a sight which raised a question in my mind. I stood there for a moment, just looked at the same picture again, uh, thought about it. So why should Harshad Mehta go to Citibank? Citibank should go to Harshad Mehta. So it means something is wrong. Something is wrong, and that gave me reason to sell some of my investments at that time, which was a good price. And within next 2 weeks, we had this whole scam unearthed in the newspapers, and the prices crashed, the money vanished. So now you see one observation which looked out of place gave a reason for doubt, and it turned out to be true. So this way, experience teaches many things. As we go ahead, when we find something amiss, we can make out that there could be something wrong in this. So that is what experience teaches. And 1999-2000 was a year of software. We had Y2K, the turn of the century coming in. So that time there was large talk that many of the computer software are programmed for year as two-digit field.
Sorry?
The year as a two-digit field instead of Y.
Oh,
The software is programmed for YY.
okay. Yeah.
So 1991 would be written as 91 or 92 or 93 or 94. So when you go to 2000, it becomes 00.
Yeah.
So it could be 1900 or 2000.
Yeah. Okay.
So many softwares had not were not planned or not made to take care of this part. So the year was a two-digit field in many softwares. So it was talked largely across the globe that there are many softwares which could falter when the century turns. When you cross from 1999 year to 2000, so many softwares would go berserk. The banking softwares and including air ticketing, plane control software, aircraft control software. There could be software in every field. So there was a huge demand for rewriting the softwares or updating the softwares to ensure that the year is a four-digit field instead of a two-digit field. So India having a lot of technical manpower, so that led to the growth of the Indian software industry.
Interesting.
You see, Indian software industry started around 1984-85 when the PCs had just made an appearance, and they were growing. But 1996-97 onwards, they started coming up. So till 2000, this was a big push to the software industry. So in TCS and Infosys, HCL Tech, and Wipro, and many such companies suddenly grew and came on the global stage. And the world respect for Indian software was there. It started coming in. Otherwise, India was not considered to be a very competent country across the globe. But then there was heavy respect, a huge respect for Indian software capabilities. So and that led to a good level of profitability for these companies. And since then, of course, companies have evolved and grown. At that time, again, there was a flavor of software in the markets, and markets run with flavor. So the software companies are booming. In Harshad at the time, there was a concept called replacement theory. So what should be the value of a company if you have to replace it? The whole equipment, whole factory.
Interesting. Okay.
So the replacement cost would be substantially higher than what is the current market cap of a company.
Okay. Yeah.
So which means the company is undervalued in the markets. So it has to go up. So that was the theory which was propounded by Harshad Mehta, and many stocks went up accordingly. So in 2000, 2001, it was dot-com boom. It was a software boom. So we had many of the software stocks valued at multiples of 100 to 200 PE ratio. And the earnings are actually growing fast.
Okay.
The earnings are also growing. But of course, software valued highly. Again, I'll give you another interesting incident. Z Telefilm is a media company. Uh, Infosys is a software company. Around that time, a market veteran, Manik Bansali, is close to me. We met, and he was talking about comparison of the two companies. Infosys being a software company, and Z being a media company. So media also a type of software, so to say. So we calculated the ratios and financials of both the companies, and she stood out better than Infosys. Z stood out better, surprisingly. And that time the stock of Z share price was about 500 rupees for a 10 rupee share. And that went on to rise to 1600 rupees after 10 for 1 split. So effectively that 500 went up to 16,000
What?
in this whole frenzy.
Okay.
So that boom we have seen, and of course after that software crashed. And in any boom, what happens is that every company tries to cash in on the boom. So there are unethical players or not so ethical players who also cash in. So many small time companies added software into their name. So a company would be Delta Construction, they would make it Delta Software,
Yeah.
or DSU Construction would make it DSU
I think
Software.
one more thing similar to that, like a lot of companies just added www dot before their name.
Yeah,
I think that still stands. A lot of
that also is
still.
there, or added .com in their name,
Yeah.
or added Infosys or Infosys or some such software word or the word software itself in the names, and their share prices started running, and people get sucked into it, though they didn't have any big software
But
business.
doesn't that display the ridiculousness of the human brain?
It does, it does. So people typically run after it.
Yeah.
Just like you have counterfeit products, similar sounding name, and people start buying it. So similarly, this is like sort of a counterfeit company, sort of. So we had such situations, and then of course markets crashed. So when the crash happened, the good companies also came down. The share prices came down, say TCS, Infosys. But then there was a strong business. So then they subsequently recovered. Whereas the other companies who didn't have big
They died.
business, they just died, and investors lost money.
Yeah.
That happened in 2001. We have seen that. Then in 2007, we had this Lehman Brothers crisis. Lehman Brothers went down in US because of home loan mortgage, which led to a lot of foreign investors dumping stocks in India just to take back money home. So we had foreign investors having invested in India, but those investors invest globally in all countries. So Indian markets were resilient and good. But back home at US, there was a crisis. Many banks were failing, many housing mortgage companies were failing. So there was crisis. So those funds wanted to take back money home. So due to that pressure, they sold in India.
Okay.
So in 2008, early 2008, we found a severe market crash here.
Mhm.
And it was when the market crashed, it's like 9 pins falling down. So that was a big crash we experienced. Again, we have gone through that, seen it. Touch wood, we didn't have any losses, and it was quite safe for us. We had planned for it. We worked. We knew that this has to happen someday.
As a company, how do you deal with these crises? Of course, you plan for it beforehand, but how do you do that?
In the Indian stock market system, there is a very good concept called of risk management called margining. So whenever there is a position taken by any client, investments, whether buying or selling, or any long or short position, the customer has to pay a margin, a deposit, to take care of that risk in case the customer is not able to meet the obligations. And obligations have to be squared up in the market. There could be a potential loss. So this is a margin concept. But the regulations earlier were not very strict about a real margin being collected from clients. The brokers had to pay the margin to the exchange. But collection of margin from clients was sort of optional. Regulations required it, but sort of a blind eye was turned to it. So we found that many brokers, in pursuit of growth of business, allowed their customers to trade without margins and took on the risk themselves.
Oh.
But we insisted on collecting margins from customers. Though, of course, it meant that we were growing slowly at the cost of growth, but we wanted to ensure that risk management is fully taken care of. So we had sufficient margins from all our customers. So as a result of which, when the crash happened, we had enough margins from customers to meet their obligations.
We'll go post 2008 now.
Yeah.
Yeah.
So in 2008, we saw the crisis post Lehman Brothers. Then we have had ups and downs in between. 9/11 was another instance when the airline crashed into the World Trade Center. Again, it was an America retaliated on Iraq. It was a war, and markets came down because of that. So we have had various global incidents or Indian incidents due to which markets crash. Because markets typically runs on greed and fear. So everyone is greedy to earn more money. So you have a lot of money coming in and people buying. So which leads to sharp rises. And looking at other people earn, we find people who are not into stocks, who are not into shares, they also jump in. So we have housewives and students and auto rickshaw, taxi drivers, everyone investing in the market. So when such money is flowing, so they have no understanding of the business, but money comes in.
Like
So
what Peter Lynch said is when the cab driver is talking to you about stocks, yeah, it's not the right time to
right,
buy.
right. That's true.
Yeah,
It's true.
yeah.
So all these phrases have been developed based on actual experiences.
Yeah.
So what happens is that we had such situations, and then suddenly an incident happens across the globe or within the country, which leads to a fear crisis, and markets prices fall.
Cool.
Then the fear sets in. Everyone is starts scampering and running away. Okay, sell my shares and I got my money back, whatever I can get. So it adds to unnecessary selling pressure. So the markets crash. But one good development which has happened in India in the last say 4 5 years, though it's been going on for last 20 plus years, uh, momentum has picked up in last 5 years, is that the mutual fund industry has matured. Mutual fund typically is pooling of funds from various investors, managed by professional fund managers, and invested into good companies. So we have a lot of investors who have come through mutual fund. So instead of investing directly in the markets, many investors are investing in mutual fund schemes, various schemes offered by various other mutual funds, and that money is being managed by professional managers. So typically, they are well informed people, and they are able to deliver good returns, reasonably good returns. So mutual funds has been a success story in India, and that has protected the investors also. In direct investment, the investor has to take a call on the investee company, and any return could be positive or negative for him. Yeah. So mutual funds have grown in India, and now we have investable flows from mutual funds running to the tune of about 250,000 crores per year, and or maybe 300,000 crores. And I expect it to rise to about 10 lakh crores, a million crores in next maybe 10 years.
Interesting.
So that is giving strength to the market. Foreign capital came in post 1991 when India liberalized and opened its gates for foreign investment. And foreign capital came in droves. Indian capital invests small monies, the foreign capital comes in large amounts. So that led to a big boom. So 1991 to 2000 and post that, also we have seen good rise in markets because of foreign capital. But over the last few years, we are finding that foreign investment has been booking profits and also withdrawing the investment. But it is getting compensated by the local investment through mutual funds. So markets are resilient. So if foreign investment is selling, we have had sales of about 10, $20 billion in a month, which has been managed, which has not affected the markets very severely. So Indian markets have matured, become deep. Number of investors which used to be maybe a crore which is 10 million. So now we have almost about 13 crore, 14 crore Demat accounts, 8 to 9 crore investors, and this number can almost double in the next 10 years. So when you have so many people across different professions, across the whole geography of the country, putting their money in savings and into markets. So definitely markets get that strength. It has legs.
Okay.
And another good thing which has happened is earlier people used to look at markets like a casino, place to gamble, make quick money.
Yeah.
But when they come through mutual fund, they understand that this money is like a FD in a bank. So we're investing money in a mutual fund. It will be invested by the fund managers, and returns will come gradually. And it can be positive, negative also. It could be high or low also, but it'll take its own time. So we have to wait for returns to come, and the longer you run, the better returns would be.
Yeah.
So that's what people have understood, and most people are benefiting out of it. So that is good about the markets.
Yeah.
One other aspect of the markets, if you would like to know, would be the technological developments in the markets.
Yeah, that's interesting.
We started the markets with an open outcry system, which is similar to what NYS used to have. You have a trading pit there. So here there used to be a hall, trading hall, we call it trading ring. So the brokers and the staff would go into the ring with, they would have orders of the customers in their hand, and they would execute the trades with counterparts there. If someone wants to buy a particular security and someone wants to sell a security, they would just do a deal and report to the exchange and the client. This was replaced by a screen-based automated anonymous trading system introduced by NSE and then adopted by BSE and mandated by SEBI. So now we have a order-driven system where you have a screen, various securities traded on that. So all buy orders are accumulated and shown on your screen. Sell orders also shown on your screen, and you do not know whom you are trading with. Yes, see a seller at certain price, a buyer at certain price, and you decide to buy or sell. So exchange provides a concept called novation. Earlier, there was a counterparty risk. When you deal with some party, the other party does not complete the obligations, so you run the risk.
Yeah.
So exchange introduced a concept called novation, where exchange steps in post trade. Once you do a deal with another party, a buyer and a seller do a trade on the screen. Then post trade, exchange steps in as a counterparty to both the parties. So the obligation of yours is with the exchange now, the clearing corporation. And for the seller also, the obligation with the clearing corporation, which guarantees settlement. So automatically you're sure that your obligation will be fulfilled, but your counterparty obligation will be
It
fulfilled.
probably remove some fear from, trading bank stocks,
Yeah.
selling stocks.
So this gave rise to a substantially increased turnover.
Interesting.
Otherwise, large capital, when they come into investments in India, they always fear that in case the exchange is able to default, counterparties default, what will happen to our money? So that fear went out, and large capital came in, and the business has grown substantially. So our trading systems have evolved. A settlement system which used to be physical shares, they're dematerialized. We have a demat system where shares are like held just like bank balances. So you have security balances with a depository. So there is no physical handling of shares. When you do deliver shares, you do electronic transfer or do like a check. You have a demat instruction to be given. So this give rise to ease of delivery, ease of receipt of shares, ease of handling shares. No need of having large number of custodians to manage your portfolio. So this resulted in as also freedom from theft of physical shares. If you are handling, a person is going out to deliver, someone can rob him. So all those go out. Fake forged shares cannot come in. So all those benefits. So the settlement system is improved. So we had account period settlement of 15-day settlement. Means trades over 15 days are accumulated and then settled together, which came down to 7 days, then came down to 5 days. Then it became a rolling settlement.
Okay.
T+5, then we moved to T+3 system, then a T+2 system, and we are into T+1 for last more than a decade. And we have introduced T+0. We are amongst the few countries in the world which have started a T+0 settlement, where you trade today and you get the money today itself.
That's brilliant.
The fastest settlement. So SEBI has been is pioneering all this, supported by clearing corporations and the brokers themselves. So systems have evolved at all levels, the exchange levels and the broker levels. The trading system, the back office system, settlement system, the banking system is also supported, is also evolved. Nowhere in the world you will find that you can transfer any amount of money within a few minutes. Any amount of money, I'm saying. It doesn't happen anywhere in the world. And costless. Zero cost. It happens in India. So RBI and NPCI have done a great job by introducing a internet-based, network-based electronic payment system, where you transfer from your bank, given instructions. You can give the instruction through your computer. No need to go to the bank also. And the funds just move through the system and they receive beneficiary within minutes. It could be seconds.
So that's like a drastic change from 14 days to, you mentioned so many things, 1992 with the bank scam, whatever, 2000 tech bubble, 2007, US dumping stocks. Was COVID the most unique out of all of them? I would presume it to be.
Yes, definitely. COVID was something which could not be planned for. When you said of black swan event, it was a super black swan event. Financial crisis can always come in markets. It was a biological crisis, a crisis across the economy, across all sectors. It was sort of life is coming to an end. Because it was a disease which people didn't know what's happening.
Yeah.
People were wondering what's happening. There was no cure to it. And before India, we founded Europe and China. There, those countries started quarantining people affected by COVID. COVID came to India quite late, little late, say about a couple of months later. So we used to watch on mobiles or on the TV, and we used to wonder what's happening. We used to even laugh at it.
Yeah.
So we find someone being just taken away into ambulance and pushed into a hospital,
Yeah.
quarantine. But very uh, unlikely in India, sort of very different picture. And then, of course, in March, we had some cases of COVID coming into India. Just prior to that, 1 month prior to that, we had an auto expo in Delhi. Every year, we have an automobile exposition in Delhi in February, where all automobile companies in India as well as abroad they participate.
Oh.
And they showcase models which they want to introduce and everything.
Interesting.
So, in just before COVID, February 2020, Auto Expo, the Chinese companies were supposed to come, but EVs were supposed to be displayed, but Chinese companies withdrew. Most of them, except three companies, most of them withdrew from the exhibition because of COVID. And Tata was all going a big way into electric vehicles, so they had occupied most of the space, and they were displaying their full future range. And I was very keenly interested. So I went to that exhibition.
Interesting.
And I was told by many people, you actually wear a mask. But that time, the concept of mask was not there for a normal citizen. So I went to the exposition without a mask. I found, and I would say about 5% of the people in the exposition wearing masks. Mainly the Chinese people and Korean and few visitors. Said was say second week of February, and having come back to Bombay within a month, I realized that we are into something something very different.
Yeah.
I mean, so COVID suddenly brought everything to a halt.
And how do you deal with that as a firm? Again, I know you talked about planning in advance. It's difficult to plan for something like COVID in advance.
Yeah. So of course it was unplanned.
Yeah.
But luckily our systems were all robust enough to handle such things. The government decided that markets cannot stop. The financial system will not stop. And during COVID, factories are closed, railways are closed, buses are closed. So many activities closed. Most shops were closed. The malls, everything, theaters, everything are closed. But government wanted that the financial economy should move. The economy should not go off rails. So it was decided that hospitals will remain open. Banks would function. Stock market would function. Money market would function. Commodity market would function. So, once these government guidelines were in place, so we had zero down day during COVID. It was just a continuous system, and there were guidelines on working. But due to lack of transport, we could not have staff coming into office. We didn't have anyone coming to office. We could come by own car. So the very surprising experience we found was that there was no one in office except myself, my brother, and one assistant. Wow. One assistant was living close to our house, so we would actually pick him up from his home and bring him to our office. And so we just three people in office. So all the work, including opening the office, cleaning the office, starting up all the machines, yes, and depositing checks into the bank, going to the bank, and trading. Then back office, accounts, confirmations, contracts, collections, payments, everything had to be done between three of us. And that is when we went hands-on. In the sense that we have people doing various activities, back office staff, but here we had to do everything. So we had the unique situation where every day we would call up staff on phone and ask them, okay, how do I print a contract? How do I generate? So they would say, go into this software, you choose this option, that option, select this, select that, and then you generate a contract. Then I say, how do I mail it through a digital signature? Then they would say, okay, guide me on phone. So
are you somewhat like grateful for that? Now you understand.
Yes, yes.
Everyone doesn't.
Yeah. So I realized that I had to learn all functions of the office and do it myself. And I also realized that I could do it much better, much faster than what the staff was doing. So if we had a staff, it would take almost a day to complete settlements. And I found a way of doing it within an hour.
Wow. Okay.
And then I trained that staff for the same. So I found that there were ways of doing it faster.
Okay. That's so like how do you have that mentality switch from like, you know, rather than okay, this happened, now I have to deal with it. You thought of it like this happened, how can I make the best of it? Well, what's that mentality switch for you?
Yes, yes. See, there's a situation which you have to face, and you have to move on with business. And rather, there was a time when many new clients were onboarded.
Mhm.
There was a time when many clients were onboarded, and we have many clients who were reluctant to adopt technology. For example, on their demat accounts, they would typically give an instruction, go to the bank, and give a physical instruction for delivering securities, where it could be done electronically. And we were always asking them, requesting them to adopt electronic instructions.
Okay.
But due to fear of their account getting hacked
Mhm.
or anyone pulling away the securities, people had fear of using the internet for financial transactions,
Interesting.
especially the older guys.
Yeah.
So then they found that they could not transact during COVID. They could not go to the bank.
So they had to use.
So we enable them to adopt electronic instructions,
Mhm.
which also included that we have to enable them. We have to fill up forms, go to their house, get their signatures, go to the bank, submit the forms to the bank, get it approved, and enable them, activate them. So of course everything had to be done. So we did it, and it was, and now they are very grateful to us.
Mhm.
So electronic business, electronic delivery, economic trading, electronic payment of funds, all this supported us to pass through COVID. And we found that the business during COVID was good. Prices crashed initially,
Yeah.
due to the fear factor,
Of course, yeah.
and then they started rising. And India benefited in the sense that a large number of investors entered the market during that time who were not investors. For example, students, housewives, small businessmen,
Mhm.
they all who were not facing markets, who were not investing in markets,
Mhm.
they entered the market as investors because their offices were closed, their shops were closed,
Wow.
their factories were closed. They had nothing to do, sit at home,
Yeah.
either play cards,
Uh-huh.
eat, sleep, watch TV. So there's nothing to do.
Okay.
Stock markets were running,
Mhm.
and as I said, people look at stock market as an opportunity, a casino or whatever they look at.
Yeah.
So people opened online accounts
Uh-huh.
and participated. And luckily, they entered at a time when the price had already crashed.
Yeah.
So they got entry at a very low level, and whatever they bought went up. So by default, they made profits.
Yeah.
And of course, when a person wins, it spurs you to play more
Yeah, of
in
course.
any game.
Yeah.
As you win, you play more
Yeah.
with bigger stakes,
Yeah.
higher stakes.
Uh-huh.
So we also found investors coming in, and more investors coming in, and others looking at each other's success and adding themselves, adding to people, and increasing investment amounts. And then there was a time when we found that when COVID restrictions were being relaxed a little bit, they were not very keen to start their offices. They were still willing to put all the office money also into the stock market.
Interesting. Okay. But I don't know. That's not what I've seen, at least personally in my experience. I've seen quite the opposite. Like when COVID hit, a lot of people shunned away from investing because, you know, job security questions, stuff like that. I don't know. I saw kind of I think there was two sides to it, and they were polar opposites. There was no middle ground.
See, India, I would say a little different compared to other countries. And within India, you have people at the lower end of strata whose incomes are low,
Yeah.
who are not into markets. And there, that question of job security came in, and people were out of jobs, they didn't have cash.
Mhm.
So, of course, they could not participate in the
Yep, of
market.
course.
Yes, I agree. But people, middle class upwards, middle and higher middle class upwards, they had money, they had savings,
Yep.
and for them, money was not a problem for sustaining.
Mhm.
They had money to sustain their business, they had money to live through the COVID, they could meet their requirements.
Mhm.
So they had funds available. So this was one of the best means to deploy the funds.
Okay.
So we found a large number of people coming in. So one strata at the bottom, of course, suffered, no doubt. And I would say they still suffer the after effects of COVID even now in terms of financial stress. It's still there.
Mhm.
But the middle and upper middle class did well by investing. And the number of investors added during that period since then would be running into maybe about 20, 30 million or more.
That's interesting. Yep.
And all benefited because of rising market.
Mhm.
And having seen profits, they have continued to invest in future till today.
So that might have had a, opposite effect to what people would have think it had. Like
Yeah.
people actually got more into investing during COVID and post COVID than, you know, a lot of people think that people would have gotten into. At least I would have thought the opposite would have happened in my personal.
No, and then again, what happens is that people who had investments prior to COVID,
Uh-huh.
when COVID came, the prices crashed.
Yeah.
So there was no opportunity to sell at a better price. And people who have been investing in the past always felt that, okay, there's no point in selling at very low levels. Some people may have sold, but not many.
You've talked about lots of, market cycles, lots of fluctuations in the market. How do you stay updated with like market trends and how do you adapt your firm to the particular market trends that are taking place?
Basically, we do research, we study companies, we study businesses, economic cycles. So we are abreast with news, international developments, Indian local news. Then we also track companies. We track their financials every quarterly. They give out the results. Their earnings calls. We attend to that. So we keep abreast with these things, and we also follow what the government economic policies are. So typically, government policies set a larger trend, macro trend, and macro trend helps and supports the micro trends. So when we are looking at macro also, we see that government policy is going in a particular direction. For example, in the last say 4 years, government focus has been on infrastructure growth. So within the budget, the the budget for infrastructure has gone up from 150,000 crores to 300,000 crores to 900,000, 700,000 crores, 100,000 crores. There's a million crores.
Wow.
And now it's 1150 million crores, 11 lakh 50,000 crores. These are numbers for last 5 years. So it's grown from 1.5 lakh crores to 11.5 lakh crores in last 5 years.
Wow.
So there's substantial growth in infrastructure. So government is focused on infrastructure. Government is supporting railways. Government realizes that India is an oil deficit country. So we have to import oil, which leads to spending of foreign exchange.
Yeah.
How can we use our own thermal resources or solar resources, wind resources to generate energy? So which means that we have to move people through rail instead of air. Air would require gasoline, which is imported. Whereas trains can require electricity, which can be generated locally. So government has been focusing on increasing and strengthening the railway network, increasing capacity, strengthening, modernizing. So, so that is one sector. Then on defense, India has been importing a lot because India has been depending on say France, Russia, US. It has Israel for defense equipments, British companies. Now, when you procure imported materials, you have to buy the spares from them, services from them on a regular basis, continuous basis. So this government has been focusing on indigenous development to rely less on imports. So they've been pushing industry, pushing the users, defense, army, navy, and air force users to develop products within India, which can be developed. So government departments like DRDO, which is a defense research and development organization, ISRO, and various other departments are supporting Indian manufacturers, encouraging them to develop products which you can avoid importing. And so much so that in the last 5 years, Indian companies have developed defense products which we are exporting now. For example, recently India sold missiles worth $400 million to Philippines.
Wow.
Okay, so when you make a missile, there is a outer shell, metal shell, there is explosive inside, there is a propulsion system or some guiding system. So these are all to be made. So Indian companies have developed the technologies. Making spares for aircraft, making spares for guns, many things. So that way government has supported. So this is visible in government policy that government is supporting defense indigenous production. Okay. So which means that the macro picture says that railways will grow.
Yeah.
So companies who make products for railway expansion, railways modernization, track, signaling, various things. So coaches, wheels. So they would grow business. Different companies who provide production to defense, they make various parts for defense. They would grow. Railway has been government is focusing on infrastructure into the road development. We are constructing about 32 kilometers of highways per day.
Per day.
Per day,
Wow.
we have developed about 30 more than 30,000 kilometers of highways in the last 5-7 years, and we intend to create another 30,000 kilometers in the next 5 years. That is what government is planning to do: expressways and highways. So, which means that investment will flow into road sector, which will include your bitumen, your concrete, steel, infrastructure development, construction companies. Government is focusing on power. India has been a power deficit country. So government is focusing on power. So you have power plants coming up, plants which are stalled, incomplete, they are getting completed. So you have power equipment companies coming up. Within power distribution, it was largely a government organized, government company controlled. And due to corruption or due to inefficiency, there was a lot of power theft. So if suppose 100 units of power are generated, the billing would happen for about 80,
Oh.
and collection would happen for 70. So almost 25-30% of the power would be lost, not in terms of losing power, but in terms of revenue loss. So to take care of this, government has started privatizing distribution and introducing smart meters and improving the network, power distribution network. The power is to be evacuated, transmitted across various regions to give it to deliver to customers. So various equipments are used, transformers, electrical lines are used, many equipment use insulators. So, and then there are smart meters installed at customer end, so that there is no power theft. So whatever is consumed is billed, so that the power theft or loss, so to say, would be around 25-30% earlier, has come down to almost 10-12% now,
Okay.
and is likely to come down to 5%. So this policy of government means that all companies into power equipments, making turbines, making insulators, cables, or transmission towers, meters, transfer. So all these companies will have good business.
Mhm.
Then government wanted to strengthen the defense sector in terms of maritime defense. So India had some few submarines which were reaching end of life or beyond end of life. So government decided to manufacture submarines in India, importing from France, construction in India, design and support imported. So we have imported some submarines, and also we have built in India also with French Scorpion submarines with French defense support. So 6 submarines were built in India. So the docks, Mesgaon docks and Cochin shipyards, the shipyards in India got the orders and they did, and it was big business for them. Each submarine cost upwards of I think 5,000 crores.
Wow.
So the business came, and so those stocks do well, and of course all parts required for them. Similarly, now these are then follow-up orders coming up.
Mhm.
So you see, uh, the macro policy of government gives you a picture as to which are the areas where business will grow, which companies producing equipments for different sectors, who would grow and who would not grow. Indian software grew because the market was outside India. So 90% of the revenue of Indian software companies came from outside rest of India, outside India, which was say 60% would be US, 15-20 would be Europe, and maybe 10-15% from across the world, and 7-8% from India. So, so the Indian software grew based on the requirements outside India. Whereas these industries which I talked about, they grew based on requirements within India.
Mhm.
So macro policies typically lay down a framework. So when we are in touch with this framework, our research shows that companies in these sectors would definitely grow and business would grow. And when we study such companies, we are able to advise our clients also that you should invest in such companies for a good return. Now railways are modernizing to avoid there is an anti-collision device called Kavach. So there is a system whereby if there are two trains on the same track,
Yeah.
and in same direction or opposite direction or standing, they should not hit each other. They should not crash into each other.
Yeah.
So that has to be now rolled out across more than 30,000 kilometers of railway network. And what has been done is only 1,500 kilometers only.
Okay.
Now it's next year, this year plan is 5,000 kilometers. So that has to grow.
Okay.
The whole network has to be done. So again, people who are into this business would get business. Government focus that we should be adding substantial non-renewable energy. We want to double the overall energy production in India, but majority of that has to come from renewable sectors. So government push solar and wind. and hybrid, which would mean you have solar panels in between the wind towers. So government had this policy. So we had this sector booming.
That's interesting.
So our research would focus on areas where growth is.
Mhm.
Okay, of course, companies' financials have to support, but a macro picture will typically lay down a framework
Mhm.
which guides as to which sectors would perform well, and typically it works out.
That's an interesting frame of thought. Like, look at it macro and then zoom in, right? Look at what the government is doing, look at what they're planning on doing, moreover, and look at the companies and company stocks that facilitate that certain thing that they're trying to do. Look at where the money is going to flow. That's a very interesting way to think. I don't think a lot of people, I at least I didn't think that way.
Mm.
And I don't think that's a widely used frame of thought, but I think, you know, that could be extremely useful when it comes to predicting at least where a certain sector or industry is going to go, because the government at the end of the day kind of dictates what happens in an economy to a large extent. So you can, once you predict the macro, you can easily predict, micro, what firms are doing, what stocks are going to do, right? I hope I got that right.
Yes, that's true. And in a developing economy, government's role is to assist development,
Mhm.
guide development.
Okay.
So it is more applicable for a country like India,
Mhm.
though it should be across the globe also, because everywhere governments lay down policy guidelines within which the business operate. So those policy guidelines definitely influence the growth or speed of growth of any industry. When you come to micro, then you have to identify companies who are well managed, who are well financed, well capitalized, who have better product quality. So within the same sector, you will have a large number of companies. So you find who are the leaders in their products, who have the better quality products, repeat customers, better profitability ratios. So their study of the particular company's financials, respective company financials, will help us identify as to which stock within that sector would be a better performer.
So you've pretty much laid out the whole macro, stratus of the economy at this point in time. What do you think are going to be what are your predictions for the Indian stock market, both in terms of sectors and particular stocks over the next decade or next couple of decades? I mean, that's a long time frame, but
See, regulation prohibits us from talking on individual stocks.
okay, fine.
So we don't discuss that, but we can discuss about sectors
Sectors for sure.
and the economy.
Mhm.
Uh, as we see it, with the present government re-elected now for next 5 years, and the focus continues on infrastructure development. So as I said, infrastructure is going to be a big area for development. Infrastructure would include railway infrastructure or road infrastructure, including airports also. And then government is working on power sector to increase the power capacities, solar, wind, thermal. So that is another area which is going to grow fast. Then introducing efficiencies in various industries,
Mhm.
which are managed by government. In power sector especially, that will come in. Then I find that government is working on Atmanirbhar Bharat, so that we should be self-dependent. So we should produce everything, whatever is possible. So a lot of import substitution products will come up, and India government is pushing the industry to develop products so that we don't rely too much on imports. Then globally there is a China plus one concept going on, because post COVID the supply chains were disrupted. Most companies have outsourced manufacturing to China, including Apple or Ford or any company you talk about, Tesla. So China became the factory of the world and the cheapest production center. But due to COVID, the supplies were disrupted. So there was nothing to sell because nothing was coming out of China. So the companies realized that we should have an alternate supplier also. So many factories moved out of China or added factories outside China. Uh, Many went to Vietnam, Indonesia, Thailand. Some came to India also.
Mhm.
So India is also one of the beneficiary of that. So we find that India is one of the large producers of Apple phones now, Apple products. For, and global manufacturers for Apple have come to India set up bases, and government is supporting them, incentivizing them. So we have a situation where uh, India will become part of the global supply chain, an important link in the whole supply chain, as an alternative to China. China has been the chemical factory of the world, so most chemicals from China come very cheap. But the chemical industry in India has also taken off because during COVID there was no supply from China. the prices that actually COVID led to a supply gap. So at that time, people who had material could mint money, any amount of money. So prices of all products just skyrocketed. The freight rates went up. A freight rate went up from $50 to $500. The product prices went up from $500 to $2,000. So anyone who had product or capacity could make money. So during that period when material could not come from China, many Indian companies added capacity. They added capacity and a large capacity also. And now we find that many countries in India, many companies of India are actually competing with China also. Though China is, of course, a cheaper producer, but India is competing effectively. So this COVID has actually spurred industrialization of many sectors in India, so to say. And so in a way, India is beneficiary of COVID.
Oh, to some extent.
Yeah, to a large extent, I would say. Because people realize that if the world is closed, if supply lines are closed, what do? You should have everything with you.
Yeah.
So that is coming up. Uh, so I feel that next, say, 10 years, 20 years, if you look at the Indian economy, we have a great period coming ahead. In terms of size, India attained independence in 1947, and we reached the first $1 trillion GDP, gross domestic product, the size of the economy, in 2008.
Yeah.
Which would be about, say, 62 years to reach the first $1 trillion in 2008. That time we were discussing, okay, from 1 trillion in next 10 years we'll reach 2 trillion. So much the cake size would double.
Yeah.
And which sectors would benefit, and what would be the sunrise industries coming in, and how do you invest? Since then we have reached 3.5 trillion.
Wow. Yeah.
By now, and now the target is to reach 7 trillion in next about 8 years, 7-8 years. By 2032 we should be reaching 7 trillion. So from 3.5 trillion to 7 trillion, okay, it's going to be a huge rise in size of the economy.
Yeah.
The cake doubles. And the biggest point to note is that average per capita income in India is currently about $2,200, $2,400, depending on exchange rate, say around 2,000 plus. It has been noted across the globe that whenever any economy crosses per capita income of $2,000, that's the inflection point for the economy. The economy actually take off from there.
Okay.
And they grow fast. So we are already on that runway. We are just about to take off, the Indian economy. So we have crossed the $2,000 per capita. So now you see that when we grow from $2,000 to $4,000 per capita or $5,000 in next, say, 10 years, at $2,000, practically every person is able to meet his basic requirements. Food, clothing, shelter, some basic requirements are met. Okay. Now when that extra $2,000 comes in as income, where does it go?
Okay.
Person will not need double quantity of food.
Of course. Double housing now.
So next $2,000 will be spent on aspirational expenses.
Yeah.
A person aspires to have better clothes, better house, better lifestyle, better health, better education,
Goes back to the
better fashion, and then aspire to use the best products, brands. So this 2,000 to 4,000 rise in income in next 10 years is going to see a big growth in branded businesses, lifestyle businesses, aspirational businesses. So what I see is that many companies will come up. Some are already there; they may grow. Some new people will also come up, and we'll find that this sector, aspirational sector, will be great. So travel and leisure. Earlier, people could not afford a holiday. Now, people would afford a holiday. If they could afford a holiday, they will go by train. Now they go by air. So we will upgrade.
Even entertainment industry, probably,
Entertainment industry
theme
also.
parks, stuff like that.
Earlier, yes, everywhere. Cars also, you see, in Mumbai, the city like Mumbai, small car used to be Maruti 800 Alto or a smaller car. And that would be, say, 3-4 lakh rupees, 5 lakh rupees for a car. Now we see already now that you don't find that car in Mumbai.
Yeah.
So the smallest car you find in the city could be about 8 to 10 lakh price.
Yeah.
So that's the price range we have reached at.
Yeah.
In next 10 years, we'll reach to maybe around 15 plus. So that way, the larger cars, larger houses, we're only finding that larger houses are selling better, faster, luxury is selling faster than the lower category of products in every sphere, whether it's garments or it's cosmetics or anything. Homes, cars. If you want to buy a Porsche today in Mumbai, you will have a waiting list.
Yeah.
You have to wait. But if you want to buy another car, you'll get it quickly.
Yeah.
So there's demand for luxury.
Mhm. Mhm.
Mercedes sells about more than 10,000 cars per year
Yeah.
in India. So, so, so that 4,000 to 10, 2,000 to $4,000 per capita will lead to substantially uh, better quality life or higher lifestyle businesses. And then you go beyond that from 2030 to 2042, when you grow from 7 trillion to 14 trillion. So the per capita income grows from $4,000 to $8,000. So that next $4,000, where do you spend?
So it's kind of like a exponential growth. Each time
Yes,
it doubles,
yes,
the economy kind of
yes, yes.
doubles.
And we are growing at about 7% plus.
Percent.
So which gives us a period of doubling period of about say 9, 10 years, 10 years or so. And being a growing economy, the growth rates will remain good. If not 7, it will come down to 5, 6, but we'll have good growth rates. Education is something now some sectors which presently I feel are neglected, which need support by government and private sector also, is education. Uh, we find that getting into a reputed college in India is a big challenge.
Mhm.
The supply is constrained. If you want to go to IIT, you have maybe 300,000 people applying for maybe 15,000 seats.
Yeah.
So it's a tough grill to get into the IITs. You want to get to IIMs, again you have 2, 3 hundred thousand people applying for about maybe 15,000 seats, 20,000 seats. Medical colleges,
Yep. Yeah.
same situation. So we need to, whereas in say go to US, you find that entry is easy. Now there's a price to pay, no doubt, but you can get into. You have to meet certain qualification requirements, some benchmarks, and you can enter.
Yeah.
So the availability of higher quality education in terms of capacity, number of institutes has to increase substantially, so that every person should have a reasonable opportunity to get that education,
Yeah.
which is missing.
Okay.
So a large number of people who are capable, but they have not entered. For example, if a person has just say a person ranked 15,000 has entered an institute, but a person next to him 15,001 rank, he is also equally capable,
Yeah.
but he could not enter.
Of course. Yeah.
So we need to increase that education sector.
Mhm.
Education, what I mean is higher education and also lower level basic education, school level education also.
Mhm.
The quality has to improve, the content, delivery, efficiency has to improve. Similarly on health, we find that public services in terms of government hospitals, they have not kept pace with the growth in population and growth in diseases. So capacity is low. So we find that private hospitals have mushroomed and private sector is guided by profit. So we find that many private hospitals have grown. Of course, they're making profits, no doubt. But then many are overcharging also. We feel so. So I think it's the government's role that they have to increase the capacity again, so that any person who wants a healthcare should be able to get it. So the healthcare capacity has to improve, the quality of healthcare has to improve, and primary and secondary healthcare has to improve. What is happening is that tertiary healthcare facilities are getting loaded by primary healthcare seekers.
Okay.
That is what we are suffering from. So government has some good hospitals, but a person who requires a primary health support for a cough or fever or some small thing, he ends up going into a tertiary hospital.
Yeah.
So that capacity is limited.
Mhm.
So there government is to help us.
Mhm.
So these two are major areas which require support.
Mhm.
And then third part would be in terms of farmers getting benefit of their produce. What's happening is that we have in farm sector we have a large middlemen. So farmers sell their produce at a low price to these middlemen,
Mhm.
and the customers end up paying a very large price to the middlemen. So largest share is taken by the
Farmers
middlemen.
don't benefit from that.
Farmers don't benefit. Farmers typically don't have income support, or they don't have financial support or financial security. So they sort of pre-sell their product at a low price to the middleman. To give an example, say mangoes. Now we have a large mango crop in south of Maharashtra, Konkan region. So a person having say 100 mango trees in his farm, now he has to take care of, invest in fertilizers, pesticides, take care of the mangoes, prevent them, protect them from monkeys. Now that requires resources, investment also. That person may not have the resources. So a trader or a middleman comes in, and then he says, okay, I will buy all mangoes of your 100 trees for certain price. So they agree on some number, and then he takes on the risk. So farmer gets his fixed amount, and the trader has to now take care of the risk, investment, everything. So what you will be surprised to know is that if the trader is selling that mango for 500 rupees a dozen, the farmer would have got nothing more than 50 rupees a dozen.
Wow.
You see the disparity.
Yeah, that's insane, kind of.
So if the farmer is able to get 200 rupees for his produce, the farmer income quadruples.
Yeah.
And the customer can get it instead of 500, he can pay 400 maybe.
Yeah.
So that requires substantial work by the government. And food processing industry is also not there, because farmers are forced to sell at a low price because they cannot store the product. There are no proper storage facilities, cold storages are not there.
Okay.
So food industry has to grow substantially, which will support the farmers and farm incomes. That is where again we need a lot of work from the government.
It's extremely interesting. So, earlier we talked about the bank scam, and we also talked about the government tightening regulations. Like, how do you view the role of like ethics in finance, and like how do you ensure your company is always ethical in every situation first?
So ethics is a very different subject.
Mm-hmm.
It's very personal.
Yeah.
Ethics flows from inside, not from outside.
Yeah.
From outside, you can enforce something, but what has to be complied comes from inside. So I would say that the question of ethics, the quality of ethics, commitment to ethics, actually flows from the person's culture, his upbringing, his family values. It flows from there. So if a person has been brought up in a family or a culture where he knows that doing something wrong is to be avoided, something has to be done in a particular manner and not in another manner. So it will flow from inside. As a regulator, regulations can put a framework for ethics, which will actually not really say ethics. I would say it would be business practices. That business practice should be in this manner. You should deal with the customer in this manner. You should not deal in such manner, and you should satisfy a customer within so much time. So those are again, regulation can provide a framework of business practices to be followed, which we read as ethics. But ethics has to be followed internally. So regulations can define what is ethical, what is not ethical, but it's for the industry to adopt it. And to give an example in the Indian context, Tata Group. Tata Group has been the forerunner in ethics in the sense that they have adopted practices which became laws later on. They were not enforced. For example, care for the staff, giving them medical support, giving the staff paid leave, giving the staff employment or continued employment to the family members, or lifetime employment concept,
Yeah.
or providing for provident fund. So out of salary you save, employer also pays and create a fund which accumulates over a period of lifetime of the employee, so that when he retires he has a reasonable amount of money to take care of his support. Within the factory, providing a canteen facility, a change room facility, a proper toilet facility, a cooling water facility, cool waters facility. So many practices within the factory have been adopted by Tatas much before regulations came. Regulations followed subsequently, and now they are enforced on everyone who is not following. So now Tata is ethics.
Yeah.
So Tata Group, when you talk of Tata name within India, it is synonymous with ethics. People know that Tata will not do anything wrong. So they are driven by ethics. It's a business organization. They also pursue profits. But they would try to be ethical. Maybe somewhere they could be borderline case also somewhere, but largely they will follow. There are other businessmen who would throw ethics out of the wind and do whatever is required to reach success, achieve success, make profits. We have seen some very large industrial houses who have grown in this manner. They have killed competition. They have manipulated government, modified government policies to suit them, or modified government policies, influence policies to cripple competitors.
What?
To cripple competitors.
That's crazy.
So competition skill.
Yeah.
And they have grown. So that is unethical, but they've done it, and it is within rules because they modified the rules so that everything fits in the rule. To give a small example, in telecom market, we had Vodafone Idea, we had Airtel, and we had Jio. Jio was a late entrant. Now when Jio came in, as per telecom system, every telecom authority has to allow certain number of ports to interconnect to each other network. So based on the government regulations, 50,000 ports are to be provided.
Okay.
Jio asked for 500,000 ports, which were also provided. They influence government to modify their regulations with 500 ports, 1,000 ports have to be provided. So they provided, and in the guise of testing of the network, they created a business and they created about a crore customers.
Okay.
And only during testing phase. Whereas you are not supposed, you only test a network, you are supposed to test on a limited number of users. They did that. Then the government spectrum payment, license payments, they influence government to modify that the law in such a manner that the computer had to pay excessive amount of money to the government. The companies went into litigation, went into Supreme Court.
Someone is forcing you to do it, is it ethics anymore? That's like the kind of question that comes up. In your eyes, from what you've said, I don't think you believe that if someone is forcing you to do something, it's not necessarily ethical that you're doing it. You're just doing it because you're forced to do it.
I would call it as a business practice.
Okay.
Not ethics.
Fair enough. Yeah. Okay. So you've given me a mini history of kind of the last 30 years, and you've been a CEO for a lot of it, at least most of it, I would say. What do you think are the most important qualities for a CEO in the financial sector, in your eyes, at least?
See, a CEO in any sector,
Yeah.
finance sector, I would not limit to finance sector, but in any sector, a CEO quality would be uh, that he should have qualities of having a larger vision, a wider vision, capability of understanding the landscape, changing landscape, policies, so that gives a macro picture to as to where he steers the company. Quality of recruiting and retaining good manpower, taking care of employees, encouraging them to perform to the optimum. Then adopt financial practices which are in line with the business. Uh, so here, when I say it's not necessarily he has to be conservative or he has to be aggressive in terms of means of finances when he does design the capital structure. So he can adopt a structure which is suitable for him. He has to ensure that the business supports all stakeholders. So we have investors in business; they should get a reasonable return, what they expect, in line with the peers, or maybe outperform them. Uh, Employees are, of course, a very strong constituent of business. Customers should be happy. Delight should be the focus. The customer who is using your services should be happy with you, and you should be encouraged to come back, ask for the service again,
And tell other people as well.
and tell other people. Uh, so that is a very big quality, and it has to inculcate into the organization. So he has to influence the culture. He has to nurture the culture of the organization. He should be adaptive to technology because technological change is happening at a very rapid pace. So he has to keep adopting technology, train people so that the organization is competent in the new environment also. So you can be effective and try to culture an innovative approach, a problem solving approach, so that many times staff would face a situation where there is no precedent as to what is to be done. So they should be able to find a solution. So that sort of culture has to be created. So innovative culture, entrepreneurship culture, is also necessary. And underlying everything is ethics.
Of course, yeah.
It has to permeate every facet of business.
Yeah, yeah.
It's there.
That's completely true. And just to wrap up, what's your advice to any young entrepreneurs, people who aspire to be in management, finance, or what's your advice to them, especially in the field of finance?
Uh, Advice, I would say, in Indian context.
Okay.
Okay, India is a great country to be in right now.
Yeah.
It's a growing country
Hmm.
with large opportunities. So anyone who wants to be an entrepreneur in India,
Mhm.
grow in India, you have the whole career in front of you, and you have the big opportunity ahead of you. If you go outside India, of course, all everywhere there opportunities are there. But a growing economy always gives opportunities, challenges, and returns to you. And I would always say that be a learner, use your education for the benefit of others, use your education to perform better, and always remain a student. Keep the student alive inside you. So as you go along, keep learning from your experience. Where opportunity provides you to reskill, get reskilled. Uh, I've seen many people who do not update themselves in some of the knowledge, changes in regulations, changes in laws. So I think that has to be done. Be a great reader.
Yeah.
Uh, what happens is that it's not necessary to reinvent the wheel. Okay, if great people across the globe, great successful people have lived their lives, and we can learn from that. For that, one option is you have to meet each of them. Many of them may not be alive.
Yeah.
Just like you're meeting me,
Yeah.
you may have to meet so many people. They may not be alive, or they may not be available. They may not provide you time, but they have written biographies, or someone has written biographies for them. So, if you are able to read stories of biographies of great people, you will find that a lot of learning will flow from there as to why they have succeeded in their life,
Yeah.
in their businesses or in their life. It could be a politician, it could be a social person, it could be a businessman, it could be in any field.
Mhm.
It could be a company also. There are biographies on companies, how companies were created, what is the story behind the company. So, how the company was created, how it grew, what challenges it faced, how it overcame them. So read such stories, read books. So that's a wealth of knowledge. So it takes maybe a day, half a day to read a book, 2 days to read a book. So in 2 days, you can gain knowledge from that person's experience, his life. And if you're able to do it across with different people in different areas, that wealth of knowledge is something uncomparable. You cannot get it from anywhere. And that will help you to understand as to what you have to imbibe and what can drive you in your life. Because the purpose of life should be that you should be a pioneer, you should be achieving greatness. It's not necessary that the whole world may recognize you, but you should feel great that you have achieved something, you have done something good,
Mhm.
and recognition will follow automatically.
Yeah, that's great. Mr. J. Toshniwal, where can people keep up with your work and your firm? Where should they go for that? Where should people keep up with your work and where should they keep up with your firm? Is there any website or?
We have a website, but it's more of a functional website.
Mhm.
So people can our business basically works on personal talk and personal discussions.
Mhm.
So people can contact us. Our contacts are available on the website also and our communications, and can be in touch with us, get in touch with us, meet us, mail to us,
Mhm.
visit us. We can visit you if required,
Sure.
and definitely it'll be a great opportunity
Mhm.
where we can interact and maybe find ways where we can help you to grow.
Sure. That's great. Thank you for coming on.
Thank you. My pleasure.